Good morning. All right. That's one big MF bear candle. Wow. Yesterday's YouTube title, Bear Market Rally Could Be Over. How timely was that? I'm not saying I expected yesterday, but geez, things got out of hand. And I didn't get out of hand. It was, you say the chickens came home to roost or whatever, but that's the power of the void. Right? Some people always ask, what is a void? Well, a void is where there's no reference point of price support or something to trade against. And so the gap up starts a void, but there were areas below. And as we look at this chart here, you see it got down to the first area and prices began to stabilize for a moment. You see the small candle body, and that failed. And okay, well, let's go down to the next one. And it got down there and it began to stabilize again. And then that didn't work. And then it went down to the next one and it began to stabilize again in a more meaningful way where it broke the low and popped back up. And it's like, wow, that one's got to work. Wrong. A bearish 180 down and, really, really into the void. And the only thing that stopped it from going down was the market closed to come all the way down to this area down here. So where are we at? 437. 5-minute charts on 24 hours. 437. All right, give or take. Let's call it 437. Down in that area. So now what? Well, now what's supposed to happen is because it went down with such momentum, we now have a void above. Wide range bar in a one time frame. Higher time frame is a momentum move in a slower time frame. And we also then look inside the bar to see which way things went, how it started out, how it ended, and so on. This was just a steady move to the downside. And so now what typically happens historically after a wide range bar is an hour range bar. And so even though things are a bit lower, it's going to, on this low down here, maybe it pokes under it. I would kind of think it pushes back up, but we'll look at other markets. I mean, that's typically what would happen. I mean, ultimately, what a pattern such as this one is that it goes down and, this 430 level has some big open interest in it and put options. Maybe it starts, but I was just looking, 436, that low down below. And it's interesting, McGraw, and you're willing, I'm open, not open, or would love to hear your view as to why there's so much activity on SPY and not so much activity on SPX as far as open interest of bearish bets. But the way things are lined up in SPY, well, I guess they're getting it right. You're just saying it's retail versus institutions. Because there's a lot of open interest, as you get under 436 to 435, 34, 33, 32, 31, until you get to 30 where it really pops. And then there's, less, half of what's at 430. So 430 is a big level. Could it get down there today? Absolutely. Just looking at, the size of this up bar and the size of this down bar to get down to 430. If we were to have that, similarly, could this be the start, the reversal of this? Why not? So, it's Friday in the wide range bar. I mean, maybe I'm not so sure, but look, you've got a multiple bar overlapping bars creating a bottom down here. When do the people that bought the put sell to close? Today, right? I mean, these all expire today. If those McGraw said, well, when did the people that bought those puts sell to close? Well, they're going to expire today. So they got, profits in that. And so, of course, the question becomes, if you've got a profitable situation, why not make more money? Right? If it would drop down into here, where those strikes down below here are now at the money and become even more profitable. However, if it starts to jiggle around over here, say for a half hour or so, and starts to perk up, well, I mean, what would anybody do? Well, I got a fucking, excuse my language, but an awesome, profit here from yesterday. I better take the money before it evaporates before the end of the day. So that's the psychology behind the pattern. And, so, that's, obviously we'll be seeing right now, things are relatively quiet, as you can see, as they're trading down here. But, back to this idea of, 1, 2, 3, 4, 5, 6, 7 bars, 1, 2, 3, 4, 5, 6, 7, 8 monster bar. So now you've got this area of supply, right? This is demand building. This is supply building with a giant wide range bar, right? Traders, institutions are like, what the hell happened? Well, things just started to feed on itself. So now, breaking below here, there's nothing to stop it actually. And those put options, the whole idea of market makers and what they're going to do and so on and so forth are fuel to keep pushing this down until it reaches, this pinnacle type of a level here as of today. And then we see what happens. So, I mean, it just like bars can do this on the upside, they can do that on the downside. Where, maybe you can get something like this, into next week down to this level, which I thought was going to happen earlier in the week, but it didn't. And now, you've got even this monster bar there to deal with. DB Puck saying 435 zone is held multiple times. Okay, how many times can you lean? Can you lean on a level, DB? Right. And now after it held here, right, and it went down and it held here, and now here, to expect it to now hold here and get a move back up again. I mean, that's like asking to hit lotto like, 6 times in a row, right? Would the 430 zone be considered minor support? As far as calling things minor and major support, no, because it's nothing to the left. It is just a level where there's a large open interest in bearish bets that as prices come down here, it acts as a support level. And then, you own this, right? Anybody that owns a put option expiring today at 430 and it comes down here, they've got a giant windfall. What would you do? All right. You'd look to close it, take your money. And so that has a tendency to add support or get a bounce going from there. So the ideal scenario would be the market opens, it's doing what it's doing here right now, and all hell breaks loose first thing in the morning, right down to here. And now you've got this monster move to the downside to a level. Right? And we see that, there's some pivot highs over here and comes down to this level where, look, intraday, it would present an opportunity for a day trade. And then we just see how far it retraces from there. Well, we just have to see, what happens here at the open and what the reaction is. The risk, So you would have to play this tight if you were going to consider playing this on the bearish side. And so we do have, some reference points of pivot highs with the overnight data here. And I say you have to play it tight because if this was to bounce down and all of a sudden just start to bounce right back up again, if it gets above here, well, it's easily likely to tag 440, which was a reference point on the way down. So, better be nimble on the bearish side here. If it gets going, fantastic. So the further it starts to drop and get away, from this level, well, greater odds of it coming down to that 430. All right. So futures. So big reversal day, big bar, pivot low down here. Buyers, stepping up normal, right? It's down at this level. Same thing they would have done yesterday. So it's jiggling around here. So now that it's, doing its jiggle down there, we can get a new little color thing. Where's my, just put a little reference point up here. Because that now becomes a significant area, on the chart. On the chart, that if it gets above this area, right, and notice it's right at 4,400, which we were looking at as a support level, on the way down, now becoming a resistance level. And should it get above there, it enters into the void up above, which is the big red candle. So from there, what we do, right, the factory work is to just kind of eyeball the middle of the red candle. And, as long as it stays in the lower half or so, and ideally in the lower third, the bearish implication of that candle is intact. So if it gets above here, right, unless, if I do that, and I put it there so I see where it is on that chart, does it line up with any overhead resistance to the left there? And we can, see how it pivoted down. It's kind of minor bounces, never violating major resistance on the 5-minute chart on the way down. And so we see it's lined up with one pivot, and then we've got, the other pivot up here at 440. And so I would say ultimately, if it was to rally, and that would be a little too far, but again, the concept here of staying in the lower half is based on the open and close. So you can get rallies, but they have to turn into topping tail bars or tails. So where it then closes back down here, that's what we would look for. So the concept or the rule of that concept is that the body, the distance between the open and close, needs to stay in the lower half or the lower third. So this is what you would look for. Meaning if you go for the bearish side on the way down, which could likely is risky, meaning, you do have some consolidation here, but, at times where we put on trades, we give things more room above the resistance area just because of wiggles. But in this case, because it's been going sideways for a while, that and the void above, it would not be a good idea to give it a lot of extra room, because it could rally significantly from a day trading point of view. Okay. All right, Qs. No, SPX. Yes. So 42.90. Right. Last I looked, there's enough juice there. It's below 4,300. It's a big way down. You've got a line of defense there. Just as a number, all right, a number, we just say, hey, a 43.50 could be something, well, there's some overlapping bars right there. So, there's some support down there, and ultimately, size ranges, and, so 42.90. And if you're so inclined, right up above, which would seem it's kind of close, but 44.60 might be, it's a thought. It's a thought. 44.60 up above. All right. Qs went a little too much more bearish, right? It's below the level. There's no support down below. There's just nothing. Right. So looks pretty ominous, like it's got to go down there. And I'll tell you, I'm hoping it goes down below it. I hope it really gets nasty. And in the green room yesterday, we looked at some other country ETFs. And my comment was, this looks like it's, with all the way the other country funds look, this looks like meltdown time. And this looks like meltdown time. What does meltdown mean? It means in the short term, a nice sizable move to the downside to support, and ideally below it. Because why below it? Because that's what sets up a better bounce where things could break further below. Things get really nasty. So earlier in the week, we were saying, hey, semiconductors, things beaten down, they have the potential for a bounce. And, if they can get up, they enter the void, bigger opportunity. They couldn't go up. And that's bearish. When they get to a level like that and they can't go up, they can't bounce. It's only one way to interpret it. It's bearish. Yeah, sure, McGraw. There's nothing to stop this from going down. Nothing. I mean, if XLK is going down and SMH is going down, Qs are going down, if Apple starts to fall apart, its earnings aren't until the end of next week. What's going to save this? Well, can't imagine. Well, Dow has been doing better, but came up to resistance area. We'll see how that performs. Russell, wow, right? This is the one I was saying. This has got the potential. We looked at the hourly chart. It's got the potential to go up here. And then it's like, the other markets started to fall apart. That was one of the comments yesterday, was looking at other markets to see what they're doing to give us guidance as to the other. Well, the other started falling apart. This one was showing relative strength. And then it's like, what the hell's going on here? Just get out. And it entered the void. And, little micro crash down to support where it's stabilized. Bitcoin, some support. We'll see. Odds are it's going lower. Crude oil, right, sideways, but not doing too much here. Got some support all the way back down. And you know what? Right, as the market goes down, there has been this somewhat of an inverse relationship. And no, it was like sell everything, right? This is Armageddon here. It's an exaggeration, right? But the trading of yesterday, if you look across markets and you say the ones that typically go up when the markets go down, they were going down. So what's that mean? Institutions are like, there's no place safe, right? Raise cash, opportunities are coming. And XLP, right? Even some profit taking in consumer staples. The safe thing, obviously looking better. But one of the comments in one of the prior pre-markets was like, even consumer staples not participating here. And, that's why we look at intermarket relationships. And transports, well, held up relatively well, but this could be a catch-up trade today where, rails and truckers and maybe some airlines, which are short-term extended, start to move to the downside. And what else? VIX, yeah, kind of a big bar, but not as big as it could be. But now what we do, we just look at where's the last resistance area. Why is that giving me that? I want to set an alert. Up at the high. You want to be aware of where prior resistance was on the volatility index. That's a bunch from there. So maybe on a short-term basis, if that did go up there, you know, S&P down at 4,300 or SPY 4,300, that might go off. Maybe it gets above it. So let the computer do the work for you. That's it for me, Dan. Everybody, we've looked at enough stuff here, and I'll give you time to go over stuff.
Morning, happy DTE 0 DTE day. So yeah, yesterday was a shocker. We were playing defense on our longs, tightening stops. Unfortunately, stopped out a number of those put spreads, but what can you do? We analyzed them every one individually, but at least we were smart enough to start hitting the throttle on the shorts. And we started doing it in the morning here, 15-minute low, just because we had beautiful bearish patterns all over the place. And so we gave 6 or 7 new directional shorts and then advisory, a couple call spreads, and we're in trail mode in all of them. They're all fine and negative here pre-market. Disney is one of our shorts. And we got into this on the nasty gap down on Wednesday. So Craig, you were talking about, poking the bear picture. That's exactly what I said about Disney CEO, going after DeSantis. And there's some guy on TV today saying that exact same thing. It's like, you poke the bear, here's what's happening. I'm going after your tax district thing. So that's going on, but my low alarm just went off 121. So I'll be adjusting all those throughout the morning. Let's look at some gappers and earnings. Now this one's not an earnings, but I've had it on my watch list here for a couple days. It's a 1, 2, 3. And it really needs to hold this level. I got an alarm set at 1950, and we'll see what it does. GPS earnings so far, the gap's too big. I mean, divide $3 divided by 14, and that's a big old gap. And that's extended here pre-market. So I have absolutely no idea what to do with that thing. LBS, I posted as a short under yesterday's low, sell setup, bearish engulfing, resistance, bearish weekly, top and tail into that wide range breakdown bar. Valan, nice. Now see, percentage wise, so you can't, everything's just not a percent analysis. I mean, this is a pro gap now. Now, what would keep me away from this one though is it's climactic on the 15. But this looked like it was in a death trend. I don't know if it's a bio stock or what, but something has totally changed here today. So we'll come back to him. Facebook, I mentioned, look at pre-market. Look, nice fluid move down, 180 reversal, gap to resistance, buy setup, range expansion bar right now, price void, prior low. So this is not only a 0 DTE watch, but that's at least as of right now, that's the best looking potential day trade long. So that we'll keep an eye on. MITQ, another little penny stock with a bullish gap up. Let's say percent wise, the gap's huge. But let's see what it does over the first 30 minutes, because you still got a void, a huge void up to $1.90 or whatever. So let's see how it sets up. I have it here in the bottom right. Task. This is an ETF um, that woman, Katie Stockton, I think her name is. They put her on CNBC every now and then, and she speaks intelligently. Um, and I didn't know she was in this trading business like the ARC woman, but she said this is a new ETF of hers. Ask. And I pulled it up, and I'm like, well, you along with the market had a bad day yesterday. XM earnings. That's a 1, 2, 3. If it closes there. Snap. Far from the 20 near the prior low. No interest in that. Wow, Disney low alarm again. I had set it another $1 lower. ISRG getting whacked. That would be a call spread, but you know it's far away, so I doubt you're going to get anything. A Z Zulu. Wow, this is quite a whacking. Look at that visually from here to here. That's a whacking. Cliff here. I know it's at resistance, but I like the bullish gap. 30-minute high. Well, Cliff Clavin here is an idea. Z. Why did my alarm go off?